Hello everyone, welcome back to Safe Stock Investments. Britannia delivered an impressive operational performance during Q1 financial year 27 with consolidated revenue increasing 8.2% year over year to Rs 50 billion. The sales volume expanded by nearly 9%, indicating that growth was driven primarily by higher consumptions rather than price increases. This is particularly encouraging because the company achieved this growth after the dual pricing issue was resolved, confirming genuine improvement in consumer demand. Management also highlighted that there was no channel stocking impact during the quarter, making the volume growth more sustainable. Healthy demand across urban and rural markets provides a strong foundation for future earnings growth. Britannia continues to diversify beyond biscuits, with its non-biscuit portfolio includes cakes, rusks, wafers and dairy products, recording double-digit growth. The croissant surged 30% year-on-year driven by successful product innovations. What is more encouraging is the company's superior channel performance, where modern trade, quick commerce and e-commerce grow at approximately 2.5 times the pace of general trade, improving the overall product mix and profitability. Simultaneously, the company continues expanding its rural distribution network, strengthening long-term penetrations across India. These initiatives significantly enhance Britannia's competitive advantage and future revenue visibility. Although Britannia is facing sharp inflation in sugar, milk, palm oil, packaging materials and industrial fuel, the company still managed to improve profitability. Gross margin expanded by 119 basis points to 41.5%. The EBITDA increased 11% year-on-year to 8.4 billion. Adjusted profit after tax also grew 13.4% to 5.95 billion. Management indicated that only around 50% of the higher input costs have been passed on to the consumer, suggesting additional pricing actions may be required in coming quarters. The margins may remain under pressure in the near term. Britannia's pricing power and premium product portfolio provides confidence that the profitability can gradually recover. Britannia's financial outlook remains robust despite temporary cost headwinds. Revenue is projected to increase from 191.5 billion in financial year 26 to 212.1 billion in financial year 27, while profit after tax is expected to reach 27.0 billion. Earnings per share are projected to grow from 105 to 112, following a stronger increase to 131.6 in financial year 28. The company continues to generate exceptional shareholders' return, with the expected return on equity above 52% and return on capital employed exceeding 53%, highlighting efficient capital allocation and high-quality business model capable of delivering sustainable long-term wealth creation. The investment case for Britannia is supported by multiple structural growth drivers rather than short-term earning alone. Management expects healthy demand to continue as pricing disruptions have largely been resolved, while premium product categories continue gaining market share. Analysts value Britannia at 50 times financial year 28 expected earnings, resulting in a revised target price of 6,579, higher than the previous target of 6,441. Although financial year 27 earnings growth may remain moderate because of raw material inflation, expected acceleration in financial year 28 earnings, supported by improving margins and continued revenue growth, providing a reasonable basis for achieving the revised target over the next 12 to 15 months. Britannia remains one of India's highest quality, fast-moving consumer goods businesses, with powerful brands, extensive distribution, consistent cash generation, and excellent capital efficiency. Temporary pressure from commodity inflation should be viewed as a cyclical challenge rather than a structural weakness. Demand remains healthy and strategic initiatives continues. Rural expansion is accelerating and new product launches are performing well. These factors collectively strengthen the long-term earnings outlooks of the company. Investors with a medium to long-term investment horizon may consider Britannia as an attractive accumulation opportunity, as the current financial fundamentals supports buy recommendations, and target price is rupees 6,579, provided input cost inflation gradually stabilizes and management continues executing its growth strategy effectively. Thank you for sparing your valuable time. Thank you for listening to this video. Happy investing.